I wasn't a bad trader, but I could never seem to take the trades I knew I should. Instead, I'd overtrade, oversize, and chase random entries that made no sense. It felt hopeless. Until I realized I didn't need more setups, I just needed one clean, reliable entry I could trust every time. Since then, I've only taken this one type of trade, and I've never been more profitable. In this video, I'll show you exactly what that entry looks like, how I spot it in real time, where I place my stop, where I exit, and how to repeat it again and again. Let's break it down. There's only one thing that separates highly profitable traders from the ones who keep losing, and that's execution. Actually entering and exiting the trade and then pocketing the profit is where the real money is made, and that's what most traders get wrong. Now to do this, I use a strategy called the LCE model, and LCE stands for level, confirmation, and execution. First, we start with a level. These are areas the market actually respects, so reactions here are real and not random fakeouts. Then we wait for confirmation. I use the EMA cloud to tell me who's in control, and this gives me a clear directional bias. And finally, execution, which is the trigger that tells me, okay, now it's time to get in. Some traders are decent at spotting levels. Some even have a way of figuring out direction. But execution is where it all comes together, or where it falls apart. And that's the part we'll focus on in this video. How to execute with precision every single time. I used to have tons of different entry and exit setups because I thought I needed something for every market condition. But I eventually realized some market conditions just suck and they're almost impossible to trade, while other conditions are great and money comes easily. The key isn't trading everything, it's knowing what to avoid and making sure you don't miss the conditions that actually pay. And this was a huge relief for me, honestly. So now I only trade one entry setup called the 5-minute cloud bounce. And this setup does two things. One, it filters out bad trading environments. And two, it gives me a clean and reliable entry when conditions are right. And this is a setup that shows up often. So you can just repeat it continuously, which is exactly what we want as traders. And the cloud bounce typically works like this inside the LCE model. First step is for the price to enter a supply and demand level. Then we look at the EMA cloud for confirmation. If it's sloping up, it means we're in an uptrend and buyers are in control. If it's sloping down, it means we're in a downtrend and sellers are in control. If it's choppy or flat, it means we're ranging and no one is in control. And from there, we wait for the price to pull back into the cloud and bounce off it. And that's our entry trigger because it tells us that the trend is still intact and it's ready for another move in that direction. Then we take profit at the next supply and demand level. Now here's where most traders mess up. Cloud bounces happen all the time, but they don't all work, and that's the trap. A lot of people think, if I see the signal, I take the trade. But that's not how it works. Because the truth is, most setups fail, and most signals fail. To get the winning ones, you need to trade them in the right conditions. The good news is, for the 5-minute cloud bounce, the right conditions are really simple and easy to follow. First, the higher time frame cloud must be trending. That means it's clearly sloping up or down, and not flat or messy. This tells us that we have longer-term buyers or sellers in our direction. There's real momentum behind the move, and that strength will continue trickling down into lower time frames. We don't want the cloud to be flat or choppy, because that means we don't have a clear side that dominates. We have uncertainty and a lack of direction. And as a trader, there's nothing you should hate more than uncertainty. You want clarity, and you want high probability. So what counts as a higher time frame? Well, for a 5-minute entry, anything between the 15-minute and the 2-hour works great. Anything above the 2 hour is kind of too big to be relevant to the 5-minute time frame. So once we zoom out to the higher time frame and see a clear trend, whether up or down, we have our first requirement and we can move on to the next step. Next, we need to make sure we're taking the right type of trade. We still need the lower time frame to line up. So if the higher time frame cloud is sloping up, I want the 5-minute cloud to also be sloping up. Just because the higher time frame cloud points in a certain direction, it doesn't mean the price is guaranteed to move that way. Let's say it's pointing up on the 1 hour, but the price is really overextended and recently put in an excess high. That means when we zoom into the 5-minute, the cloud is turning bearish and could indicate a reversal. That's not a clean trending setup anymore. If both time frames agree and the price action generally respects it, then that's your green light. And if not, stay patient and wait until they do. Now let's talk about the type of trade we're actually taking. With the LCE method, we're not looking to predict every single movement on the chart. We're just asking one simple question. Is price more likely to move to the level above or the level below? That's it. because price moves from one supply and demand level to another, like a magnet pulling it toward the next zone. It just does that over and over. And I'll link the video here where I tell you exactly how to find them. So if the price is moving away from the level it came from, it's a breakout. And if price is moving back to the level it came from, it's a reversal. Now, reversals are totally valid trades in the LCE model. But for this specific setup, the cloud bounce, we're focused on clean, trend-following breakouts. That's where the setup really shines. So let's bring it all together. First, price needs to be at a supply or demand level. Then, the higher time frame cloud needs to be trending. And finally, on the 5-minute, we're looking for a breakout trade with a cloud bounce. Let's walk through how this would play out in a real trade on ES futures. We see here that the price is at a supply and demand level. That completes our first step. Now we need to ask ourselves the question, which level is it more likely to move to next? To answer that, we zoom out to the 15-minute time frame. And here we see that the cloud is very clearly sloping down, and the price rejects off it cleanly. So what does this tell us? This tells us that sellers are in full control. We want to trade with them since they have the momentum, or at the very least not trade against them. Now the higher time frame is bearish. Let's look at the 5-minute time frame. We see that the cloud is also sloping down, and price action is also confirming. We see multiple lower highs and lows. Remember, you don't want to go against this. It may seem tempting to look for an oversold bounce or a reversal, but that's just your personal bias getting in the way. Don't pick up pennies in front of a steamroller. Now from here, all you do is enter short, place your stop a safe distance above market structure, and target the next demand level. Then get your hands off the mouse and let the market take it from there. And that's it, you just rinse and repeat. This is the only type of trade I take now. Because here's the truth, trying random setups, trading choppy conditions, or winging it doesn't work long term. Sometimes I get asked, well, what would you do if the market wasn't trending, or if conditions were different? And my answer is simple. I wait. It's like picking a stock. Would you invest in a stock that's been sideways and choppy for years and will cause you a lot of misery? Or would you invest in the stock that's been getting a lot of volume and action? I mean, the answer is clear. And you need to think the same way when you're day trading. Only trade the high probability setups that'll make you a lot of money and ignore everything else. If you want the full breakdown of how I trade using the LCE method, I put together a free training that walks you through it step by step. Just click the link down below to get it. Make sure to like and subscribe, and I'll see you in the next one.